Hi everyone, I'm John Scambalerian. On behalf of Stuart and I, we are absolutely delighted to be here. We run small business workshops throughout Australia and New Zealand, and very much so by webinar these days. What we love most is when we get to work with someone as passionate and caring of their clients as Marion is. That's been absolutely wonderful. Thank you, Marion, who's architected today the topic and had a good look over the content to make sure it was relevant for all of you. There's us. Interestingly, trying to understand what business life looks like beyond the next 2 to 3 months is really difficult. Some economists are saying it will be September before we know exactly what the fallout will be. Others are saying much longer. The tips are 10% unemployment, 20 to 30% of businesses may well disappear, which all sounds a bit grim, but there are things that can be done. There are things that can be done in the here and the now to prepare for the future. So today we'll talk about what are the near-term actions that you need to take. And to Marion's very good point, what does that road to recovery look like? Today's topic is crisis cash flow management. But when we use that term financial management, which has become front and center at the moment, it does mean more than cash flow. And there's things that businesses are doing, rightly prioritizing towards cash flow in this environment that will or may have a detrimental effect on their profitability or even the risk profile of the company. What makes this doubly tough is that we're now into a topic, financial management, whereby everybody else, almost everybody, thinks that other people know more than what they do. And I remember when Stuart and I were running workshops in the early days, you could generally hear people's heartbeat in that first session before morning tea because they were just terrified of what they didn't know. Now, financial management is much more than cash flow. We're going to start broadly at success factors and very quickly narrow in, and then Stuart's going to take us on what needs to be done in this crisis. So we'll talk firstly about financial success. Note the stormy seas that we're in, and you'll see 3 life rafts. They are not just about survival, but they're about reviving and thriving in your business. There's 3 key elements. I won't talk about them for too long. Of course, profitability, we've known for many years, is for tomorrow, and it's important. The strength of a company is generally found in its risk. How much have the owners contributed compared to everybody else? And those businesses with very strong balance sheets, which I'll touch on briefly, are in a good position to survive and take advantage of every opportunity possible over the coming period. And then there's cash, which is the topic of the day. We've always known that cash and profit don't match up. We've never realised it more than today, but it's always been a fact. And we know that because we often don't have the available cash to pay the tax bill, which was based on the profits that we've earned. So 5 things that businesses need to do to make sure that they are strong and profitable and have positive cash flow. And I want to spend a bit of time talking about the first element here, which is what you sell your products or services for, what you pay for them, and of course, how much you sell. We are all zoning in on cash flow, but the single most important decision for many businesses over the coming period is the price that you will charge. Later on, I'm going to run in a couple of weeks some break-even seminars because I think managing a new break-even point is something that every business needs to understand, because if pricing is out over the coming period, one of 2 things will happen. We either won't be profitable or we won't be competitive enough. And if businesses at the moment are if you're basing your prices on the competition, you're hoping for 2 things. The competition know what they're doing and that your cost structure is exactly the same as theirs, which is rare. And that means someone's making more money than somebody else. There are 3 features, any product or service. Is it good? Is it cheap? And can you get it quickly? And there are products and brands that we know exactly where they stand. They play in 1 or 2 parts of this triangle, rarely ever all 3. That's a pretty tough game to play. So knowing where your product stands, establishing your new break-even point, and pricing to make a profit, not just to sell goods necessarily in addition to cash flow. Secondly, cash flow, and Stuart will spend a lot of time on cash flow, and I'll bring it down to a very simple cycle. When we walk through client workshops, we actually show them in days, measuring from 1 year to the next, and the dollar effect in days, and it's fairly pronounced. And let me say that if businesses aren't measuring their performance at the moment, aren't measuring cash flow, then it's going to be more difficult to manage. But put simply, we sell the stock, we create an account receivable, and back it comes. The service industries on the line will say, we're different, we don't have any stock, or we don't have any, that's fine. You guys go straight to accounts receivable. And the retailers on the line that say, well, we don't have accounts receivable, of course, you buy some stock and back it comes. Primary producers have a bit more work to do in this cycle. And of course, there's industries that have a very short cycle because they're offering a service and getting paid very quickly. Every business on the planet has this cycle. And at the moment, managing this or spinning this cycle as quickly as possible is the focus of everybody in business. And that's where Stuart will spend some important time today. Financial statements, in my experience, get used for two reasons. And now that we have computers, we don't have to file them in the drawer anymore. On top of last year's, we just save them on the disk. So they're used for two reasons quite often. One is a way of borrowing money. And secondly is something that we may submit to the tax office in order to work out what we need to pay. These are very powerful pieces of information. And if we can just understand not how they're put together, we don't need to know that. But if we can understand what they're telling us, we can actually use them to make planning decisions and business decisions. Every single decision that you make in your business has a financial consequence. We want to know what that is. So in the planning phase, words are really important, but numbers underpin it. We've got a plan in numbers, and that's supported by words. I very quickly want to show you a second financial concept. When we talk about financials, again, people glaze over. They're generally focused on a few items in the profit and loss, rarely the full picture. Let's look at how it looks. We go into business on day one with a sum of money. It's not enough. So we get money from suppliers and we get money from lenders, and we pull our resources together to buy assets. And that, for however much we want to complicate it, is the balance sheet. We have assets to make a sale, out of which we pay expenses, then we pay some tax, and hopefully come up with a profit after tax. I'd like to just make a comment about tax. One of the questions most asked of any accountant is, can you manage my performance? The problem with that is that whenever you're reducing your income for tax, it means that the value of your business is taking a hit as well. Here's the good thing. If you can save $1 on any of those expenses, you get to keep 70 cents. 30 cents goes to the tax office, but you keep 70 and your business will be worth more money. Once we generate a healthy net profit after tax, there's three things we can do. We can reinvest in the assets of the business, repay debt, or take it home. All of those are equally as important, and it will depend on your age, your health, your beliefs, the cycle of your business, and what you want out of it. But the business is important. If you don't keep reinvesting, it won't be there. For Marion and the EcoLease team to keep helping you, it's important that you pay back liabilities because you will want some more in the future. And finally, the owners, you have got to look after yourself because you're the driving force in the business. Just a layperson's definition of what you've looked at, that model on the right, that is the financial engine room of any business. And what we're focused on today is the fuel for that engine, which is on the left. Then we look at expansion. Expanding your business or setting up in a second outlet is one of the most exciting things that any business can do. It really is wonderful. I just want to share with you a family story. A great uncle of mine, I'm coming to you from Western Australia and Stuart's coming to you from Sydney, the beauty of online webinars. I have a great uncle here who had a huge orange orchard, and he decided many years ago that he wouldn't sell any longer. He'd make his own juice, and he started a company called Harvey Fresh Juice. And I can still remember it with 3 of my cousins and 3 casual workers with handheld mixers, and they grew. and they won supermarket contracts and airline contracts, and they exported and went into other lines of juice, and then they went into milk production, and then they became the biggest exporters of carrot juice into Japan. At the time they had record profits, they ran out of cash and sadly lost what they have because they didn't forecast how much the growth would cost. So if your business is growing, there's a couple of things to be mindful of, and also one important equation to ask yourself. So sales and profits we know go up, which is terrific, and we get excited about that. But we have to be careful because often liabilities will go up and availability of the cash will go down. The key to growing your revenue or expanding your business is this. It's about risk versus reward. The reward is the extra profits. The risk is your position. How do you look now insofar as how much you've contributed to the business versus all of the people that you owe money to? Finally, access to capital. People like EcoLease, or when I say people, EcoLease will be the mainstay of the business community over the coming period. And the reason is accessing capital will be number one for all businesses. And banks will have decisions to make because they can't ultimately lend to everyone. So positioning yourself well, positioning your business very well is going to be important. One, you'll get access to the capital. And secondly, you'll get the best rates and the best deal put forward as well. And finishing on that, there are 4 ways that you can source money. There's profit after tax, there's what you contribute, there's the suppliers, and of course, loans. And a lot of what we're looking at, and we'll look at today, about leaning on these 2 people. And again, if you're looking for money from these sources, what you need to know is how much will you need and when will you need it? Because there's nothing worse than going back for more and saying, well, actually, it wasn't enough. So again, I want to finish with whatever gets measured gets managed. And through the tools that you'll be able to use from the remainder of this session, you'll know exactly what you need and when in the way of assistance, but also some really helpful hints and tips that Stuart will walk you through to build cash flow.